Welcome everybody to Wall Street Reporter's next Super Stock, a live stream July 15th, 2021. We are back with AIML Innovations. AIML is the symbol. Let me correct this symbol here. There we go. That's the right symbol on the screen now, AIML. And we're going to find out the latest news, latest developments on where this company is going. So Tim, welcome back.
Thanks for having me, Jack. It's always a pleasure to be here.
Absolutely. So, Tim, this has been some very exciting developments. You're basically going to be acquiring, or you're starting off with, I guess it's a percentage, 20% of this yes. French mental health app, and it looks like really what you're really doing is building out like a full suite of health tech apps. I mean, that's kind of. Look, you start off with a health gauge. Now you got this the French company.
Yeah.
Can you explain to us like where are you what's your vision for this company? Like what is really what I want to know is what needs to happen for you to get revenues with the existing suite to get revenues to, let's say, $20 million, $20 million, because if you get to that number. The company would trade at a 400 million valuation, so it would be a 20 bagger. And at the end of the day, our audience, they just want to know what's going to make the stock price go up. So, what needs to happen to get, 15, 20 million is a low bar. So,
yeah, it is. It absolutely is. And in fact, we're constantly working on these sorts of business strategies. And so, your question, doesn't come as a difficult one for me. Well, first of all, when we talk about our first acquisition, which was HealthGauge, their projections alone cover that nut, that 15 to 20 million in revenue. They're looking at that in their year or two of revenue alone, with ignoring what else is going on in the company. And the way they're intending to reach those sorts of revenue numbers is through aggressive penetration in the Canadian and U.S. markets via a B2B business model. And their strategic partners are organizations in the healthcare industry, such as the insurers themselves, whether they're private insurers in the U.S. or government insurers in Canada and other countries, ACOs, HMOs, hospitals, or even large corporations. So that is the business model on the HealthGauge side. Of course, they also do have an e-commerce site set up so that there are some retail sales being generated as well. But that's a bonus revenue stream. And so our first projected revenue stream is HealthGauge, and we're making good progress towards those goals. They've been working with a number of potential strategic partners for the last many months, and are getting to the point where they're converting some of that dialogue into first pilot projects, and then the pilot projects over into going concern commercial contracts.
So HealthGauge is getting traction, and now you picked up. You're getting the French company. I get the name. Tech to Health, right? What's that?
Tech to Health. You got it exactly right.
Tech to Health. Okay, they don't make it easy. Okay, so Tech to Health. We talked about it on the last video. Anybody could watch it. Essentially, they're like a mental health app. And they have an interesting model. So their customer base is really it's an enterprise model. So they're signing up,
very much
100,000 customers at a time. Give us the model, and because they put out some interesting numbers. Was it 5 million one customer? I want you to talk about like what they do and how big the opportunity is, like how fast and how far can they scale this thing?
Sure. Okay, love to. So Tech to Health is a Paris, France-based digital healthcare innovator. And they have a portfolio. You are referring to it as an app, and they do have an app, but that's one small piece to the puzzle. It's actually a complete, proprietary basket of services and products that they supply, and it includes some unique proprietary digital assets, remote live counseling, and even physical wellness centers. And so they're using that in combination to provide everything from general wellness through to clinically supported, evidence-based psychotherapy with psychiatrists and everything in between. And so it's a complete solution for corporations who are mindful of the the needs of the mental health needs of their employees, and also insurance companies doing the same for their insured, that provide both medical and non-medical interventions for body and mind healing via their digital platform. So it's a complete spectrum of products that support mental health. And the mental health is the next wave of the pandemic. There are recent studies that show that nearly half, I think it's 48% of employees globally feel that their mental health this year as compared to a year ago have deteriorated. Incidents of everything from drug and alcohol abuse, spousal abuse, suicide, depression, anxiety, and so on have skyrocketed, in part because of the pandemic, but in part it's a reflection of modern life. And while digital health has made some tremendous inroads recently in other areas, in mental health, it's just gaining traction now.
Yeah, the mental health thing is getting a lot of attention. There's a couple of, there's been a couple of apps, mental health apps that are getting huge valuations, like, unicorn type $1 billion valuations.
Yeah, absolutely.
And, so I want to, I think that the thread that ties in together all the different aspects of the businesses that you're basically acquiring is this AI and ML. So artificial intelligence, machine learning, that's kind of the thread that ties everything together. So
right. So the two threads, that's one of them. Sorry for interrupting, Jack. But yeah, that's definitely one. But specifically what we're focused on today is the AI-based technologies as they apply to digital healthcare. We are looking at some potential acquisitions of AI technologies that extend beyond the digital healthcare, but at this point, our acquisitions have been focused on the healthcare side of things.
Okay, so let's talk about the numbers now. So Tech to Health, they put out some news. Explain to us what this means, how they got 5 million over a couple of years with that's just one company, one client, small client. So what's the deal about?
Sure. So important to note that Tech to Health rolled out their new platform 1 month ago. That's it. This new product has only been out in the marketplace for 1 month, and in that month, they've signed 3 significant contracts. One with a global industrial user, industrial manufacturer. The name will be published, but the company themselves wants to make news on it, and they're talking about a September timeframe for them announcing their partnership with us. So until that point in time, we've just got to refer to them as a global industrial company.
Okay.
But they operate literally globally. They have 170,000 employees. They operate in 5 different languages. So they're a very large going concern corporation. They've signed a 3-year contract with Tech to Health, and that's to supply their 170,000 employees with their mental health support.
So I think the key first takeaway is that's a very significant validation that a company of that size, 170 something thousand employees, is choosing to use Tech to Health.
Exactly. Absolutely. That's a great validation, a great proof of business model when you have a major global corporation who could subscribe to this sort of health product in a number of different places, and they chose to partner with Tech to Health. So that's definitely a feather in the cap.
Is there a cross-selling opportunity into HealthGauge from this
Clearly.
deal?
Absolutely, there is. In fact, shortly after this agreement was signed between Tech to Health and this industrial company, the industrial company said, "Okay, great. Now that we've put that to bed, and you're going to be taking care of our employees' mental health needs, we do have one other really significant issue, and that's that we, for whatever reason, we seem to have a large percentage of our employees globally that have hypertension issues, high blood pressure issues. Do you know of, or do you have some sort of technology that can help us monitor and early diagnose our employees with high blood pressure?" And of course the answer is, yeah, do we ever. We're partnered, one of our sister companies, HealthGauge, that's exactly what they do. Through this device here that I'm wearing right now, this is the HealthGauge wearable device. This will monitor blood pressure 24 hours a day and give early warning back. And so this is actually one of the the sweet spots of HealthGauge's ability. And so yes, so now we've got new dialogue going on with this same industrial company for products from the HealthGauge side.
And it's not just blood pressure. I mean, it monitors like a whole bunch of other health signals.
Absolutely. So besides the blood pressure, it's monitoring your heart rate variability, ECG, PPG, as we mentioned, the blood pressure, your temperature, body temperature, sleep patterns, activity levels, and a whole bunch more, and giving you real-time feedback. And that is their entire business model is working with employers such as this that we're talking about, and supplying that employer with the ability to help their employees monitor on an ongoing basis their chronic needs for different problems or diseases like this. So there is tremendous crossover between what HealthGauge is doing and what Tech to Health is doing. And in fact, that's part of our business model, is we're not only looking for companies that are in the AI and healthcare space, we're looking for companies that have synergy. They're expected to operate as standalone entities and survive on their own, but at the same time, where there's synergy for them to cooperate and provide cross services, they'll do that as well. So one will piggyback off the other for sure.
Yeah, so that makes so it becomes almost like a virtuous cycle, and so you can really scale from there. So exactly. So let's get back to the original question. So with that said, right, you have this. This is just one. This is just the one customer. I mean, the world is built of companies.
So the initial contracts. 3 contracts in the first month. First one with this global industrial company with 170,000 employees. The other 2 contracts are with insurance providers out of France. One of them with about 85,000 insured. This product, Tech to Health's mental health support, will be offered and covered by the insurer for their 85,000 employees, insured members. And same with the third company. It's also another online insurance company, and this will be provided as part of their basket of healthcare covered products under the insurance plans. So collectively, in the first month, Tech to Health has accessed 300,000 potential users of their product, and based on the number of individuals, these 300,000 potential users, and some of these.
How much per month do you get from HealthGauge? How much does the device sell for again?
So
what's the
are you talking HealthGauge or Tech to Health now?
Let's do both. Let's do HealthGauge first.
Okay, so on the HealthGauge side, for subscription to the platform, the employers will be paying $25 a month, and that will give the employer, the employee or the insured, and their medical team full access to all the medical analytics for that user.
Okay, so all you need is, I mean, if you just get to 100,000 people on the platform, right?
Yeah.
Not even 100,000. Even if you get to 50,000, that'll give the market an indication that you can scale to 100. And 50,000 users is nothing. That's what is it? That's 50,000 times 20. Is that $1 million a month? A little over $1 million a month, right?
That's right. Exactly.
Is my math
exactly.
right?
So,
I get
so it's significant just there. That's on the health gauge side. On the tech to health side.
So that'll give you 10 million plus $12 million run rate from that with just 50,000 users.
Yeah.
And that's the thing. That's what would get you to that 10x plus upside in the stock. So you already have right now a built-in path to get there. You have this couple 100,000 users for the not all of them. Probably not all of them are going to use this, right? It's going to be maybe 10,000.
Sure.
Whatever.
Right. There's going to be some adoption rate and that's to be seen. But it starts by having access to a set of users or potential users. So the numbers you quoted are on the health gauge side alone. Now, if we throw in on the tech to health side, what you're talking about is this revenue projection for these first 3 contracts in the first month was based on projected potential uptake by the employees and users based on some historical projections. But what it doesn't take into account, and this is a big thing, so this was based on $60 per user consultation fee for mental health. And that's great. And on the basis of that, there's a $5 million of projected revenue. But starting in January of 2022, so 6 months, less than 6 months out, under new European law, the employers and the insureds must cover the mental health for the employees with respect to the chronic or the serious mental health issues. And on that side, the government mandated price is 800 euros per quarter per user, which works out to be about $3,500 per year per user.
Just for mental health?
Just mental health. Just for mental health. $3,500 per user per year.
Okay,
so the numbers get real large, real fast if you have any sort of adoption rate amongst your user set for that need.
Okay, wait, does that mean that you can get that $3,000 per employee per year? Or no, you're going to get a percent. You're going to get whatever it is percentage, but it just shows you that the government is
right. So So the government is mandated, and of course, most insurance in Europe is government funded insurance, but there are a lot of private insurers as well. But it doesn't matter whether it's government funded insurance or private. The law is that they have to reimburse the company per employee that uses this service for digital therapy, to the extent they reimburse to us to the extent of $3,500 per user per year. And so when we're starting off with 300,000 potential users. Now, of course, we're not suggesting that those 300,000 all need deep psychotherapy counseling and are going to be subscribing to this. But there will be a percentage. And my point is that of this $5 million initial projection revenue, that doesn't include any of this. Because it starts in January of 2022, we just set it to the side and did not include that in the projections at all. You throw that on top of this, and even this first month's worth of contract where we've projected 5 million can be many, many times larger than that. But that's just the start of things, because remember, as I keep saying, this was the first month that the platform went live. There's many, many more contracts in the works right now, and over the course of the next few months, you're going to see those start to roll out and be announced. And not only in Europe, but Tech to Health has a very strong presence in South America as well, and is in some advanced stage dialogue with some significant healthcare providers in that part of the world as well. So these numbers are going to get real significant, real fast on the tech to health side. Now, we own a piece of that. We own 22% of the global interest in tech to health. But our sweet spot in AIML is the North American market, meaning the US, Canada, and Mexico. We own 70% of that market. And we have, now that we've consummated the arrangement with Tech to Health. Now, we're going through the final paperwork to make the agreement official. We've got a binding letter of intent that we signed a few weeks back, and we expect over the next week or two, the official final agreement will be announced. But we do have a binding agreement in place today. And so we're starting to do our planning with respect to the penetration in the North American market for the Tech to Health suite of products. And that's where we have 70% of the revenue, not 22%. And to that end, I've already been in some advanced stage discussion with a significant health-related company in the US who has a very significant presence in the US, who is extremely excited to partner with us in the US market. So we're already making some significant inroads on behalf of the Tech to Health suite of products in the US market. Okay, so we announced these first couple.
So there's the bottom line is you have, it looks like there's a pretty clear path to get to, you know, $10 million, $20 million run rate for AIML.
We're completely comfortable with those.
And that's, I mean, and again, just so even if you do 20 million run rate, let's say you're doing 20 million run rate, yeah, the market is putting crazy multiples on health tech companies, you know, 10x, 20x, 40x, I mean, whatever. So let's say you even get to, I'll just say 20x. Yeah, I don't know if you do it really quick, if you can get to 20 million really quick, you might trade at 20x. That's 500 million, multiple, and you only have what, 20 million shares out. So, I mean, potentially the stock could get to $25. I mean, that's what it would look like, $25. If you can ramp that 20 million run rate, let's say by the end of the year, I don't see any reason why the stock couldn't trade at this 500 million valuation, $25 a share. I know it sounds crazy, but obviously there'd be some, you might raise capital, dilution, etc. But so just,
I'll let the market decide what we're worth. My job is to go out there and find some creative acquisitions on behalf of the company, and I believe that we're doing that. And this isn't the end either. We do have some other acquisitions that we are in the due diligence process of, and I believe that we're going to be able to spring those on your viewers, in the upcoming weeks and months. That we'll be able to bring on some exciting additional companies in this same space, as well as show that we're making some significant inroads in the North American market with Tech to Health, expanding our footprint globally with Tech to Health, and as well being able to share the progress that we're making on the HealthGate side. So we've got some really exciting stuff coming up over the upcoming months. That's for sure.
Okay, so you have more acquisitions in the pipeline, building out the health tech suite, the AI-powered health tech suite. Sounds very exciting. Okay, Tim, I think we'll just end on that note. We'll have you come back, next, when you're gonna have the next big news item.
Sure, that sounds good. I always appreciate being on your show, Jack. So anytime, I'm ready.
Very good, Tim. Thank you again.
Thank you.